Special taxpayer services for senior and super senior citizens. In this video, we will discuss the exemptions, deductions and benefits available to senior citizens and super senior citizens under the Income Tax Act 1961. As per income tax law, an individual is treated as senior citizen on attainment of age of 60 years and above and a super senior citizen on attainment of age of 80 years and above at any time up to the last date of the respective financial year. Let us now see one by one exemptions available to senior and super senior citizens under the income tax law. A super senior citizen of the age 80 years or above is exempted from linking PAN with Aadhaar by CBDT notification number 37/2017 dated 11th May 2017. A senior citizen of the age 75 years or above is exempted from filing income tax return as per section 194P of the Income Tax Act. With effect from assessment year 22-23, a senior citizen of the age 75 years or above having pension and interest income only from the accounts maintained with the bank in which they receive such pension, they are not required to file their income tax return. The specified bank shall be responsible for computing their total income and deducting tax thereon after giving effect to various deductions allowable under Chapter 6A and rebate under Section 87A of the Income Tax Act. However, the senior citizens can choose to pay tax in the new tax regime. In that case, they would not be allowed the deductions under Chapter 6A of the Income Tax Act. In order to claim the exemption from filing income tax return under Section 194P of the Income Tax Act, senior citizens should be of age 75 years or above. The person should be resident in India in the previous year. Source of income should be pension and interest income only, and the interest should be accrued or earned only from the same specified bank in which the pension is received. The bank should be notified by the central government as the specified bank. The senior citizen is required to submit a declaration to the specified bank. The specified bank will be responsible for deduction of TDS, if applicable, after considering the deductions available under Chapter 6A and rebate under Section 87A of the Act. Once the conditions are fulfilled, there will be no requirement to furnish income tax return by senior citizens. Further, if such interest income earned by a senior citizen during the year is less than Rs 1 lakh, the bank will not deduct any tax from such interest income. Let us now see the contents of the declaration which is required to be submitted to the specified bank in order to claim exemption from filing income tax return. The senior citizen is required to declare the total income along with the deductions available under Section 80C to 80U of the Income Tax Act, rebate available under Section 87A of the Income Tax Act, and also a confirmation from senior citizen of having only pension and interest income. The senior and super senior citizens are also eligible for higher tax exemption limit. For resident individual taxpayers, the basic exemption limit, that is the income which is exempted from payment of tax, is presently Rs 2.5 lakhs for an assessment year. However, for senior citizens, this basic exemption limit is Rs 3 lakhs, and for super senior citizens, this basic exemption limit is up to Rs 5 lakhs for an assessment year. Let us now check the tax rates applicable to senior citizens and super senior citizens. A senior citizen can opt for either the old or the new tax regime. If the senior citizen chooses old tax regime, they are eligible for deductions under Chapter 6A. However, the deductions are not available in the new tax regime. The tax rates for senior citizen of the age 60 to 80 years would be up to Rs 3 lakhs, there would not be any tax liability. For incomes between 3 lakh 1 to 5 lakh rupees, the senior citizen will not be required to pay any tax after claiming relief under Section 87A. However, for income above Rs 5 lakhs to Rs 10 lakhs, they are required to pay Rs 10,000 plus 20% of the amount above Rs 5 lakhs. If the income is above Rs 10 lakhs, they are required to pay Rs 1,10,000 plus 30% of the amount above Rs 10 lakhs. For super senior citizens, that is, individuals above 80 years in age, they are not required to pay any tax up to Rs 5 lakhs. From 5 lakh 1 to 10 lakh rupees, they are required to pay 20%, and for income above Rs 10 lakhs, they are required to pay Rs 1 lakh plus 30% above Rs 10 lakhs. If the senior citizen chooses new tax regime, The tax slabs. For financial year 24-25 relevant to assessment year 25-26, there is no tax up to rupees 3 lakhs. From 3 lakhs to 7 lakhs, the rate of tax is 5%. From 7 lakhs to 10 lakhs, it is 10%. From 10 lakhs to 12 lakhs, 15%. From 12 lakhs to 15 lakhs, 20%. And above 15 lakh, 30%. Please note, tax rebate up to rupees 20,000 is applicable to resident individuals if the total income does not exceed rupees 7 lakh. Surcharge and cess will be applicable over and above the tax rates. The marginal relief on rebate is also available, and the rebate is not available for income that is taxed at special rate, for example, capital gains under section 112A. For financial year 25-26 relevant to assessment year 26-27, there is no tax up to rupees 4 lakhs. From 4 lakhs to 8 lakhs, the rate of tax is 5%. From 8 lakhs to 12 lakhs, 10%. From 12 lakhs to 16 lakhs, it is 15%. From 16 lakhs to 20 lakhs, 20%. From 20 lakhs to 24 lakhs, 25%. And above rupees 24 lakhs, 30%. Please note, tax rebate up to rupees 60,000 is applicable to resident individuals if the total income does not exceed rupees 12 lakhs. Surcharge and cess will be applicable over and above the tax rates, and the marginal relief on rebate is still applicable. Also, please note that the rebate under section 87A is not available for income that is taxed at special rates, for example, capital gains under section 112A. Senior citizens are also eligible for exemption from capital gains on transfer of capital asset under reverse mortgage scheme. If the senior citizen transfers residential house property by way of reverse mortgage as per the reverse mortgage scheme made and notified by the central government, they are not liable to be taxed under the capital gains. They are also not liable to be taxed under any other head of income. Let us now see the additional deductions which are available to senior and super senior citizens. The senior citizens are also eligible for deduction for contribution to NPS Vatsalya scheme. Under the scheme, the senior citizens can contribute for minor grandchildren and claim a deduction of rupees 50,000 under section 80CCD subsection 1B in the old tax regime. Once the grandchild reaches 18 years, the NPS Vatsalya account will be converted to a standard NPS account, and the grandchildren can independently operate the standard NPS account. The maximum limit of deduction under section 80D in respect of payment made for health insurance premium in respect of senior citizen is allowed at rupees 50,000 as against rupees 25,000 for other individuals. The deduction is up to rupees 50,000 for medical expenses incurred on the health of a senior citizen if no amount is paid for health insurance of such a person. For claiming this deduction, it is mandatory that the health insurance premium or the medical expenses are paid by any mode other than cash. Another higher deduction is available in respect of expenses incurred for medical treatment of a specified disease or ailment. For individual taxpayers, the amount of deduction available in respect of expenses incurred for medical treatment of a specified disease or ailment of self or dependent relatives under section 80DDB is rupees 40,000. However, in case the expenses are incurred by a taxpayer in respect of a dependent senior citizen, the entitlement is rupees 1 lakh in an assessment year. The senior citizens are also eligible for higher deduction on interest earned from bank and post office. In the old tax regime, individual taxpayers other than senior citizens are allowed maximum deduction of rupees 10,000 under section 80TTA in respect of interest income from savings bank account. A senior citizen can claim deduction up to rupees 50,000 under section 80TTB in the old tax regime in respect of interest income earned on not only savings bank account but also on interest income earned from any bank deposits or any deposit with post office or cooperative banks. It is also to be noted that as per Finance Act of 2025, if the interest income earned by senior citizen during the year is less than rupees 1 lakh, the payer bank or the post office will not deduct any tax from such interest income. Let us now check the eligibility for standard deduction from the pension income. Standard deduction up to rupees 50,000 is eligible in the old tax regime and up to rupees 75,000 is eligible in the new tax regime against the pension income, which can be claimed by an individual under section 16 of the Income Tax Act. Accordingly, senior citizens who are in receipt of pension income can claim a deduction up to Rs 50,000 in the old tax regime and 75,000 in the new tax regime. Let us now look at the procedural benefits which are available to senior and super senior citizens under the Income Tax Act. The super senior citizens are also eligible to file their income tax returns manually. A super senior citizen can file the income tax return in the paper mode if they are having total income of more than Rs 5 lakh or having a refund. The return can be filed in form ITR 1 or ITR 4. For such individuals, electronic filing of ITR 1 or ITR 4, as the case may be, is not mandatory. However, senior citizens can also opt for e-filing if they wish to. For other individuals, the advance tax is applicable where the estimated tax liability for a particular assessment year is Rs 10,000 or more. However, for a senior citizen, there is an exemption from payment of income tax provided he does not have any income under the head profits and gains of business or profession. A senior citizen is also allowed to submit Form 15H to the deductor for non-deduction of TDS on certain incomes referred to in that section if the tax on the estimated total income for a particular financial year comes at nil. So there are various special taxpayer services which are available for senior and super senior citizens. To know more, you can visit our website www.incometax.gov.in or contact our helpline numbers.